Hi, I'm Tom Lydon with ETF Trends, and welcome to this special webcast. Can Bitcoin join gold at the alternative asset table?
The media likes to have them basically have a boxing match, and I've always disagreed with that. When it comes to the golden rule, the 10%, one of the big parts of asset allocators, which we saw earlier, is volatility. And when an asset class becomes, the greater the volatility, the less you should have exposure to it in that diversified portfolio. And so when I look at that model and try to model it, because Bitcoin is so new, having a 2% to a 5% weighting is just wise and prudent for a host of reasons. And so that is one reason why I've advocated having your 10% exposure to gold in that diversified portfolio, like the Ray Dalios of the world, and having an exposure from 2 to 5% in Bitcoin. And if that makes you worried, then you should deeply consider a MicroStrategy as your positioning of it. HIVE blockchain I know has been recognized as a proxy for owning the space.
First of all, Bitcoin is the dominant crypto asset network. So I think that the other cryptos are much more risky, so I wouldn't recommend anybody invest in anything other than Bitcoin. And then I think that gold and Bitcoin both represent non-sovereign stores of value or property. And the great idea of the next decade is digital property spreading to 8 billion people on mobile devices. But if you look at how you made money in the last decade, Amazon, Apple, Facebook, Google, they all represent digital retail, digital relationships, digital communication, digital video, digital music. Those digital transformations create trillion-dollar networks. The last great chapter in the mobile wave is the digital transformation of property, and Bitcoin is the dominant digital property network.
Gold has been around, as you know, 5,000 years, and Indian women in particular wear 6 times the amount of gold that's in Fort Knox. It's protected them from all the changes in governments, corrupt governments, monetary debasement of the currency. So this is not going away. And if we take a look at 30 years ago, China and India were basically consuming about 10% of the world's gold. Today, they're at 55%. And it's highly correlated to rising GDP per capita in this part of the world. And so this idea of gold all of a sudden becoming extinct, I don't believe it, because people like to wear it.
Advisors have money that's liquid and available to put into a Bitcoin allocation. Is it a 2%, 3% allocation into Bitcoin or MicroStrategy or a miner like HIVE appropriate? And again, I know your allocation is much different, but as we're trying to get away from the traditional allocation 60-40, is that reasonable to dip your toe in the water that way?
I'm well known for this. You don't have to invest all your money in Bitcoin, just the money you want to keep.